Today we're diving deep into one of the hottest tech stocks out there. Meta Platforms, ticker symbol Meta. If you're curious about why Meta is making waves in the stock market right now, stick around because I've got the latest scoop on their earnings, growth drivers, AI revolution, and what Wall Street analysts are saying about the stock's future. Let's get into it. Meta just reported a blockbuster first quarter for 2025. Revenue came in at a whopping $42.3 billion. That's a 16% increase year over year. Even more impressive, net income surged 35% to $16.6 billion, and earnings per share jumped 37% to $6.43. These numbers blew past Wall Street's expectations and pushed Meta's stock up nearly 3% in just 1 week. Their core family of apps, think Facebook, Instagram, WhatsApp, drove $41.4 billion in ad revenue, showing advertisers are still flocking to Meta's platforms despite global economic uncertainties. Plus, daily active users hit 3.43 billion, beating forecasts and proving Meta's massive reach remains unshaken. But it's not all smooth sailing. Reality Labs, Meta's metaverse and VR division, still posted a $4.2 billion loss, although that's an improvement from previous quarters. This segment is a long-term bet, so investors need to be patient here. AI is Meta's secret weapon right now. Meta AI has exploded to nearly 1 billion monthly active users, powering smarter ad targeting and personalized content. This AI-driven approach is boosting advertiser ROI and keeping Meta's ad business resilient even when other platforms struggle. And it's not just software. Meta's hardware efforts are gaining traction too. Sales of Ray-Ban Meta AI glasses have tripled, and new collaborations with EssilorLuxottica hint at a bright future for augmented reality devices. CEO Mark Zuckerberg has committed $60 to $65 billion in capital expenditures for 2025, mostly focused on AI infrastructure and data centers. This massive investment shows Meta is betting big on AI to fuel future growth. Let's talk valuation. Meta's current price is around $597 per share, with a price-to-earnings (PE) ratio of about 23.3, slightly below the tech sector average of 25.3. Even better, Meta's PG ratio, which factors in growth, is near 1.0, suggesting the stock is fairly valued relative to its earnings growth. Wall Street loves Meta right now. Out of 53 analysts covering the stock, 45 rated a strong buy, with an average price target of about $681. That's roughly 19% upside from today's price. Some bulls are even more optimistic, with price targets as high as $935, implying over 60% upside. Meta has also lowered its total expense guidance for 2025 to between $113 billion and $118 billion, but increased capital expenditures to $64 to $72 billion, reflecting the company's focus on AI and infrastructure. Meta's dominant position in social media and digital advertising is a huge moat, but there are risks to watch. Regulatory challenges in Europe could impact revenue, especially with recent rulings on ad-free subscription services. Also, e-commerce advertisers in Asia might pull back spending due to changes in customs duties. Then there's Reality Labs. While losses are narrowing, it's still a big drag on profits. The metaverse is a long game, and success isn't guaranteed. On the flip side, Meta's AI investments and expanding user base offer a long runway for growth. Threads, Meta's Twitter competitor, recently hit over 350 million monthly users and could surpass Twitter's user base by year-end, opening new monetization avenues. Looking ahead, Meta's revenue is projected to grow from about $183 billion in 2025 to over $274 billion by 2030, with net income rising from $62 billion to around $91 billion. Earnings per share could nearly double, reaching almost $40 by 2030. price targets for the next 5 years range from $600 to nearly $1,000 per share, reflecting strong confidence in Meta's ability to execute on AI and digital advertising growth. Even conservative forecasts suggest a 15 to 20% upside by the end of 2025. Meta Platforms is firing on all cylinders right now. Strong earnings, AI-driven innovation, expanding user engagement, and a solid valuation make it a compelling buy for growth investors. While the Reality Labs losses and regulatory risks warrant caution, the company's dominant market position and massive investments in AI infrastructure provide a powerful growth engine. If you're looking for a tech stock with both near-term momentum and long-term potential, Meta is definitely one to watch, and maybe buy. If you found this video helpful, smash that like button, subscribe for more stock insights, and hit the bell so you don't miss out on our next deep dive. Drop your questions or thoughts about Meta in the comments below. I'd love to hear what you think. Thanks for watching, and see you next time.